lot of people are feeling something unusual in the crypto market right now, and XRP is right at the center of that conversation. Over the past months, there has been a noticeable shift in attention, volume, and institutional discussion around XRP, and it's making many investors stop and ask what is really happening behind the scenes. This isn't about hype, and it's not about fear either. It's about understanding why XRP keeps showing up in major financial discussions when so many other assets fade into the background. XRP has always been different from most cryptocurrencies. From day one, it was designed not just as a speculative asset, but as a bridge between traditional finance and blockchain technology. While many projects focused on replacing banks, XRP focused on working with them. That design choice caused controversy early on, but it also positioned XRP in a unique place that no other crypto has fully been able to occupy. When people say that attention around XRP feels rushed or accelerated, what they are really noticing is the speed at which large-scale financial conversations are happening. Banks, payment providers, and financial institutions move slowly. They don't jump into trends overnight. So when XRP repeatedly appears in regulatory discussions, cross-border payment pilots, and institutional research, it naturally raises eyebrows. One of the biggest reasons XRP continues to matter is its use case. Cross-border payments are still one of the most expensive and inefficient parts of global finance. Transactions can take days, involve multiple intermediaries, and cost significant fees. XRP was designed to address that specific problem by enabling near-instant settlement with low transaction costs. That value proposition remains relevant today, especially as global trade and digital payments continue to grow. Another factor driving interest is regulatory clarity. In the United States, regulation has been one of the biggest obstacles for crypto adoption. Uncertainty makes institutions hesitant. XRP's legal journey has been watched closely across the entire industry, not just by XRP holders. When clarity begins to form around one major asset, it sets a precedent that can influence how other digital assets are viewed. Institutional investors don't move based on social media trends. They move based on risk assessment, compliance, and long-term strategy. When analysts notice institutional wallets interacting with XRP-related infrastructure, it signals that serious evaluation is taking place. This doesn't mean guaranteed outcomes, but it does mean XRP is being taken seriously in rooms that most retail investors never see. Another important point is liquidity. XRP consistently ranks among the most liquid digital assets in the market. Liquidity matters because it allows large transactions without extreme price impact. For banks and payment providers, this is essential. A system that cannot handle volume simply cannot function at scale. XRP's liquidity profile is one reason it remains relevant in enterprise-level discussions. There's also the global aspect. XRP has always had strong adoption outside the United States, particularly in regions where cross-border remittances are critical. In countries where sending money internationally is a daily necessity, efficiency matters more than speculation. This global demand creates a foundation that isn't entirely dependent on US retail sentiment. Technology-wise, XRP's ledger continues to evolve. While it doesn't rely on energy-intensive mining, it uses a consensus mechanism designed for speed and efficiency. This design choice aligns well with growing concerns about sustainability and energy consumption in blockchain networks. As environmental considerations become more important in financial decision-making, efficient systems gain an advantage. Market cycles also play a role. Crypto markets move in waves of attention. Assets that survive multiple cycles often do so because they provide real-world value. XRP has been through extreme highs, deep lows, intense criticism, and regulatory challenges, yet it remains one of the most recognized digital assets globally. Survival itself becomes a signal of resilience. Another element many overlook is infrastructure readiness. XRP isn't just a token, it's part of a broader ecosystem involving payment rails, liquidity hubs, and enterprise tools. This infrastructure focus makes it easier for institutions to experiment without fully committing up front. Pilot programs and limited use cases allow testing before large-scale deployment. Public perception often lags behind institutional reality. By the time something becomes obvious to everyone, it has usually been in development for years. Many financial technologies operate quietly until they are mature enough to roll out. XRP's long development timeline may actually be one of its strengths rather than a weakness. It's also important to separate price speculation from adoption. Short-term price movement can be driven by emotion, but long-term value tends to follow utility. XRP's price history has been volatile. Like all crypto assets, but its underlying use case hasn't changed. That consistency is rare in an industry known for constant pivots. Another reason XRP discussions feel intense is because it sits at the intersection of crypto and traditional finance. That intersection is where the biggest debates happen. Purists argue for decentralization at all costs, while institutions prioritize compliance and stability. XRP doesn't fully belong to either camp, which makes it controversial but also uniquely positioned. Media coverage also amplifies momentum. When major financial outlets mention XRP in the context of regulation, banking, or payments, it reaches audiences beyond crypto enthusiasts. This broader exposure brings new scrutiny, new questions, and renewed interest. Not all attention is positive, but visibility itself matters. Retail investors should approach all of this with balance. No asset is guaranteed to succeed, and no technology is immune to competition. XRP faces challenges from other blockchain solutions, traditional payment upgrades, and evolving regulations. Understanding these risks is just as important as recognizing potential opportunities. One of the healthiest approaches is to view XRP as part of a larger financial transition rather than a standalone bet. The world is moving toward faster, more digital forms of value transfer. Multiple technologies will likely coexist. XRP's role may be significant in some areas and limited in others. Long-term trends matter more than daily headlines. Infrastructure development, regulatory frameworks, and institutional experimentation happen over years, not weeks. Patience is often required to understand where real progress is being made. It's also worth noting that adoption doesn't always look dramatic. Sometimes it looks boring. Quiet integrations, back-end upgrades, and incremental improvements don't make viral headlines, but they build the foundation for widespread use. XRP's story has often unfolded in that quieter space. For viewers watching this, the most important takeaway is education. Understanding why XRP is discussed, rather than blindly reacting to excitement or fear, puts you in a stronger position. Markets reward informed decisions over emotional ones. Crypto as a whole is still an evolving space. Regulations are forming, technologies are maturing, and use cases are being tested in real-world environments. XRP happens to be one of the projects most closely tied to this transition, which is why it continues to attract attention. Whether XRP becomes a dominant financial tool or remains a specialized solution will depend on many factors outside any single investor's control. What matters is recognizing why it remains relevant while so many other projects fade away. This ongoing focus on XRP isn't random. It's the result of years of positioning, development, and alignment with a real-world problem that hasn't been fully solved yet. Cross-border payments remain inefficient, expensive, and slow. Any technology that offers improvement in that space will continue to be evaluated seriously. As always, responsible investing means doing your own research, understanding risks, and never relying on a single source of information. This discussion is meant to provide context, not financial advice. The crypto market moves fast, but real adoption moves carefully. XRP sits right between those two speeds, which is why it often feels like something big is building, even when nothing dramatic appears to be happening on the surface. And that's why so many people are watching XRP closely right now. Not because of hype, not because of panic, but because when long-term financial systems start paying attention, it's usually worth understanding why.